following content is a technical analysis on Helmerich and Payne Incorporated, a company of the energy sector in oil and gas drilling, here off the daily interval. And while we had some pretty big headline come out with Saudi Arabia recently making a commitment to implement an additional 1 million barrel a day unilateral extendable reduction in oil output for the upcoming month of July. The voluntary cuts agreed upon by the 9 OPEC Plus nations are now set to persist until December of 2024, ultimately surpassing the previous deadline, which was supposed to be in December of 2023. The duration of the cut ranging from, they believe it could even range from 6 to 9 to 10 months on out, which really has the potential to strengthen positioning and ultimately drive prices upward. When you think about all the shorts that have been packed into the energy sector, where they'll need to cover, as far as a strong fundamental case to do so, Saudi Arabia has swiftly executed this production cut within a mere 3 months of a previous reduction. And when you align with the current stock levels and the resolute stance of the Saudi Arabia energy minister, who continues to assert a willingness to take any necessary measure in order to really manipulate the price to the upside. And as a result, OPEC is likely to shoulder the blame for any resulting price hikes at the fuel pump, which my theory would be presenting a nice opportunity for the Biden administration. It'll allow them to indirectly contribute to rising inflation while appearing powerless to intervene there. And just really a stark reminder to the Western oligarchs that the old saying goes, "You can't print oil," still holds to be true here. And I was just swifting through some of the oil companies down here, and I found this beautiful, right off the daily interval, a clean, bullish, falling wedge pattern with nice, pretty continuous positive divergences, with a nice, clean, divergent low. Nice, clean, bullish, and positive divergences really amongst all three technical momentum indicators, with confirmed bullish crossovers there in the oscillator and MACD. And we're already having a nice printout and some of the green candle closes above the zero line thresholds here off the oscillator histogram. And we're just at a pretty decent key inflection point. Bull traders, long traders, they want to see a solid candle break above this primary reactionary high downtrend line off the February reactionary highs there, which will ultimately take out dual resistance coinciding with the 50 and 50 exponential day moving average there, which would again be a nice bullish clean buy signal right amongst the top of that wedge there, and maybe even a nice clean pullback, gunning for that first target there at 35.42 for a 5.7% in gains, up to 37.38 price support for 11.2% in gains, and then ultimately a complete backfill of the gap resistance up there to 39.29 price support for 17.2% in gains. It is highly correlated with the spot price of West Texas Intermediate and Brent crude oil. The spot price of crude oil is going to be a big factor in where the price of this stock goes as well. But any more significant develops, really notice that could be respected is a pretty decent bullish doji star, at least one to be respected here. Nice, clean, indecisive doji star there, bullish continuation pattern, and we had that minimum rejection amongst that 200 weekly moving average, and here we are starting to trend some momentum to the upside here with some nice, clean weekly interval closes. And again, call it a triple line of inflection points where you have the 200 weekly moving average here. And again, if we take that resistance out there, you're going to take out the 50-day moving average. You're going to take out that primary reactionary high downtrend line off the February reactionary highs there. And I believe you'll get that nice clean backfill of the gap there, especially if Mohammed bin Salman and the rest of OPEC continue to press down on these cuts, especially when you have a peak demand just starting to bake in with beginning stages and beginning phases of the summer peak oil consumption that's going to come with airlines and travel, increased vehicle usage with oil there. So it's just a confluence of multiple fundamental factors weighing in on the price of oil, and we'll see if we get it, especially if you start to see a panic of short sellers beginning. They're already down 40% here, 40%, great gains to the downside if you were short on oil due to some of the recessionary factors there. And again, you just want to see that. You want to see that get taken out, and I believe a nice, clean panic covering of short trade setups will ensue.